Tracking Bitcoin miner earnings and sentiment has always provided invaluable insights into what we can expect for BTC. So here we're going to analyze how miners are currently positioning themselves for the coming weeks and months. Today we're going to be looking at what Bitcoin miners may be expecting to happen next, and where better to start than the multiple chart we have here on bitcoinmagazinepro.com, which is looking at the current miner earnings in relation to a yearly average of the previous year. And as we can see, as I film this is currently at around 0.8. So they're still down about 20% on their previous yearly average earnings, which is obviously hurting miners to some extent. But considering it was only a few weeks ago that this was at 0.53, indicating that miners were only earning about 53% of their previous yearly average, must have been hurting miners. But one thing that may be a little bit surprising is after the halving event, which obviously saw this Puer multiple drop from around 2.44, so well over double their yearly miner earnings prior to that, to, like we said, 0.53, we've not seen a drop off in miners coming into the network. We've seen, if anything, a huge growth in the amount of hashing power coming into the network, new miners entering and competing to mine blocks. If we just go to the hash ribbons indicator here, we can see that over the past few months, this has continued to grow. This is a 30-day and a 60-day moving average of the Bitcoin hash rate. But one thing we can see is recently, as I'm filming this, these haven't quite crossed just yet, but we can see that this 30-day and 60-day moving average of the hash rate is very close to crossing and actually giving us a bearish hash ribbons signal. If we just zoom out here, we can see that every time this chart gives us these red shaded areas, this 60-day moving average is above the 30-day, which indicates that miners are potentially capitulating, which has actually historically led to great periods to potentially accumulate BTC, especially once this 30-day moving average crosses back above the 60-day. Gives us a great hash ribbons buy signal. One thing we can also look at, not just miner earnings in terms of BTC or the amount of blocks that they're mining every day, we can actually now track the amount of output in terms of US dollar or BTC miners can expect based on their output of hash rate. One of the new charts we have here on bitcoinmagazinepro.com is the hash price. So if I just zoom in here, we can see that the hash price is looking at how much miners can expect to earn by putting 1 terahertz of computational power into the network each and every day. Would currently earn them about 0.688 BTC in miner earnings, or in US dollar terms, that's about $44,000. And what you can see over the past few months is this has continued to tumble. Even post halving, this has absolutely plummeted. So even though we are seeing something like the hash ribbons climb and we're seeing something like the Puer multiple continue to increase, this is indicating that miners are still pouring investment into the network. If we just zoom out here, we can see that this has been on a pretty massive downtrend over the past few years, but it is still indicating that if miners are pouring more resources into the network, then they are bullish on the future price appreciation potential of BTC. And another great metric we've added that you can use alongside this is the actual volatility of the hash price, which is definitely a metric I'm going to be closely watching going forward, because historically this has very accurately predicted upcoming big moves in the BTC price action. For example, down here, if we see this very low period of volatility here, this was just prior to the Bitcoin price dropping from around $29,000 to $25,000, so over a 10% move there. If we just pick out a few other periods when it was incredibly low, such as here, when Bitcoin's price was at $6,300, just prior to us dipping to around $3,000. And there's plenty of examples of this happening down here, $577, and that was just before Bitcoin ran to $20,000. So when there's quite a lot of stability in the Bitcoin mining industry, this usually happens just prior to a massive move for BTC. Now, if I just zoom in over the previous couple of years here, we can actually see that this has recently begun to plummet because Bitcoin's price action, which had been rather stagnant around that $60,000 level for the previous few months now, has obviously post-halving led to a lot of miners potentially settling into the new norm, which is a $60,000 BTC. So while BTC miner earnings are down compared to the previous yearly average, obviously there is still enough profitability for them to be pouring resources into the network, to be increasing their computational power, even in spite of lower and lower profitability. So what I'm going to be looking for is this hash price volatility to drop to around this 0.3, 0.4, potentially even lower 0.25 levels. As I film this, we're currently around 0.47, so there is obviously a little bit of room to go to the downside before we can maybe expect a big move due to this. But definitely alongside that, the hash ribbons indicator potentially watching for another bearish cross on that. In unison, they may actually point to a little bit more of a downwards move in the BTC price action. But if these do not cross and we do see a hash price volatility decrease, then we may be on the cusp of a massive move to the upside for BTC. And alongside that, something like the Puell multiple increasing, then many signs are actually pointing towards Bitcoin miners being very bullish of Bitcoin's potential over the coming weeks and months. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, Bitcoin miner earnings are down considerably compared to their recent yearly average, as we could see from the Puell multiple. And this is not only driven by months of stagnant BTC price action, but also due to the competitiveness of hashing power competing for block rewards and fees. Like we could see from that hash price and the hash ribbons indicator, we can see that miners are still pouring into the network, putting more and more investment into mining equipment and cheap electricity, even though price action has been stagnant. So clearly there is quite a bullish bias for miners on what may happen next for BTC, and especially if we track that alongside something like the hash price volatility, which gives us some insights into the volatility of miner earnings in relation to their hash rate output. And historically, this metric has accurately forecasted upcoming periods of increased or decrease, I guess if it's incredibly high, periods of price action volatility. So looking in unison at this decrease in volatility and increasing hashing rate, there's definitely a positive bullish outlook for miners going forward. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin miner sentiment currently. Do you think they are a little bit bullish of the future potential price appreciation of Bitcoin? Or do you think that they're more a little bearish and potentially just accumulating as much BTC now before potentially an expected decrease in price? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.